Good evening, good evening, good evening. I'm so excited to be here as always. My name is Jennifer Matthews. Welcome, 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 welcome to our weekly broadcast of developing your debt-free dream lifestyle. I am your hostess with the mostest, Jennifer Matthews. Always glad to have you. Once again, we have a phenomenal topic. Actually, this one I brought to you a couple of weeks ago. I was actually at an event and it was so loud. This was the one that wasn't on Zoom. It was on Facebook only. And the event was so loud, it was really hard to hear. And I promised you that I would re-record it. So here I am. I am re-recording it. So I am Jennifer Matthews and I coach Henrys. And if you're new to us, you may be wondering what is a Henry? Like a man's name, Henry. Henry, I coach Henrys how to be debt-free and dream again using my signature money system. And a Henry, like a man's name, stands for the HE is for high earner, and the NRY is not rich yet. And it's actually a demographic, just like the Gen X or millennials. And that's what it stands for, HENRY, high earner, not rich yet. And I coach Henrys how to be debt-free and dream again using my signature money system. So tonight is all about credit scores. Yes. Good credit scores, getting your credit scores up over 700, preferably over 740, is part of getting debt-free and developing your debt-free dream lifestyle. So regardless of where your credit scores are, you absolutely can raise your credit scores. Absolutely. Absolutely. And I don't mean going and getting one of those phone numbers off the telephone pole. No, don't do that. Don't do that. So let's jump into tonight. If you're new with us, I'm on two platforms. I'm on Facebook Live and I'm also on Zoom. If you're on Zoom, I have slides and I take and put that on YouTube. So let's jump into it. And I do need your help with YouTube. I do have a slide on that tonight. We always go through the legal stuff. Anything I say is for your information and your education, and you need to do your research. And you need to do your research on anything I say and make sure that it is right for you and your situation. Okay, so that's the legal disclaimer. Okay, now I mentioned YouTube. I need everyone who's watching or hearing this to please go to YouTube and search for Matthews on Money. It's all one word. MATTHEWS on Money. MATTHEWSON Money. All one word. Search that on YouTube. Any one of the videos that comes up, I need you to click subscribe. Once I get over 100 subscribers, then I can customize the YouTube channel, and then we will simply be youtube.com/Matthews on Money. So easy to find. I'm almost at 100, y'all. I need your help. YouTube, search Matthews on Money, click subscribe, so that then I can go and customize and it will be easy to find. I'm putting the videos up on YouTube so that you can share this information. We have had some powerful, powerful videos. I'm getting great testimonies from the videos, and they will make them so much easier to find if you could say, oh, just go to youtube.com/Matthews on Money. We can't do that yet without you. So I need you to go station break, like type it in, youtube.com, search Matthews on Money, all one word. Hey, Cynthia. youtube.com, put in a search, Matthews on Money, all one word. The videos will come up. Open up one of the videos and click subscribe. Once I hit 100 subscribers, then I can go in and rename the channel to be Matthews on Money. And then you'll simply be able to tell people, oh man, this video was awesome. You need to check it out. Go to youtube.com/Matthews on Money, and all the videos will be there and people can choose from the videos and watch them. But I got to get to 100 subscribers before I can change the name of the channel. Okay, let's jump into tonight's lesson. So I know, Cynthia, you were on that night that I was at the event, and it was so hard to hear. So I'm re-recording that, and I have slides to go with the credit score. And I've got more information because I'm not being challenged by all that noise that was in the background. So this is what we're going to cover tonight. We're going to talk about what is a credit score, where you get your free credit report, what goes into your credit score, focusing on the 65%. 65% of your credit score is totally in your control. And that's the 65% that will increase your credit score. You do that 65% and your credit score will go up, I promise you. And then the importance of children. Your children, whether they're big or little, your nieces, your nephews, your grandchildren, the kids at Sunday school, the kids in the Girl Scouts, the Boy Scouts, your youth group, whatever. All those children, the importance of them and their credit scores. Their credit scores are under attack. And they don't know it, and they won't know it until they hit the age of 18, 21, 25 and go pull their credit scores. And then they get denied. And it's too late. So action needs to be taken now with the young people in your life, whether they're your young people or your extended young people. We're going to talk about that tonight. So what is a credit score? It's a statistical calculation, and the formula is somewhere with the recipe for Coca-Cola and KFC. It's locked up like that. So don't ask me. I don't know. It's a number that ranges from 300 to 850 on the FICO score, which is the most widely used credit score. FICO, F-I-C-O, stands for Fair Isaac Corporation. F-I-C-O, Fair Isaac C-O Corporation. Okay. They have a great website, myfico.com, has a lot of educational information. I recommend you go read it. I don't recommend you buy anything on the website, but I recommend you go read it because knowledge is power. There's a lot of good information on that website, myfico.com. What is your credit score? It is a snapshot of a moment in time. It is a snapshot of a moment in time. Right now, November the 14th is different from November the 12th, is different from November the 15th. It's a snapshot of the here and now. Because tomorrow you might close a mortgage on a $200,000 house. That changes your credit score tomorrow. So your credit score would be different tomorrow than it is today, because that $200,000 house will go on your credit score tomorrow. So your credit score would be a snapshot of today, and it would be different tomorrow. And your ideal credit score is over 740. So your credit score is a snapshot. That's why the number is always different. And I'll get into the 3 credit bureaus, and each one has a different score on you. And they can be totally different. So who uses your credit scores? Landlords. When I was a landlord, I was pulling credit reports. Employers. Let me put a pin in that, or asterisk. An employer can only pull your credit report if it's related to your job. So, if your job has nothing to do with financial responsibilities, they cannot, or positions of certain trust, they cannot pull your credit report. But if your job responsibilities are positions of financial trust or positions of significant trust, yes, they can pull your credit report. Because how you manage your money may be a direct indication of how you're going to manage their money. They absolutely can pull your credit report. Okay? So yes, depending on the job, they can pull your credit report. So when the government shut down the end of 2018 into 2019, and you had a lot of people, because I'm outside of Washington, D.C., you had a lot of people with top secret and super secret government clearances that started missing payments on their bills, and they were concerned about their financial ratings dropping, and then they lose their security clearance because finances are a component of their security clearance. So I was working behind the scenes to try to help them maintain their financial status so they could maintain their security clearance so they could keep their job. So depending on your job, yes, the employer can pull your credit. Financial institutions, yes, they pull your credit for loans, car loan, mortgage, credit cards, whatever. Yes, we know they pull your credit. Retail stores the same way. Please don't get a store credit card. There's really no reason for a retail store to pull your credit. Do not get a store credit card. The terms are horrible. Utility companies, they can pull your credit report under some circumstances. Insurance companies are not supposed to pull your credit report, but guess what? I wouldn't put them past them. They were allowed to do it up until President Obama said no. But first of all, a lot of things he put into place have been repealed, but it was big business, and I don't know if they stopped doing it anyway. Because their thought process is the lower your credit score, the higher risk you are to insure, or the less likely you are to make your premium payment. So those are some examples of who might be using your credit score. And the lower your score, the more you're going to pay. The more interest rate you're going to pay, the higher premium you're going to pay. The higher your car note, the higher your mortgage payment. So it's really important to get your credit scores up. So please pay attention to the information that I'm dropping. So getting your credit reports and scores, and again, presentations, they go on YouTube. There are 3 credit bureaus, and each one has a score for you, and the scores can be different. Why? Okay, first of all, the 3 bureaus, Equifax, Experian, TransUnion. There's more than 3 bureaus. These are the 3 primary bureaus. Equifax, Experian, TransUnion. I'm trying to watch the Facebook to see if there's any questions. I don't know if I could see them or not. Those are the 3 primary bureaus. Not everybody reports to all 3 bureaus. That's why your score might be different. So somebody might report to Equifax that you were paying on time and they didn't report to Experian. Or somebody might report to Experian that you paid late, but they didn't tell Equifax that you paid late. So your Experian score is lower because they told Experian you paid late, but they didn't tell Equifax. So that's why your scores are different, because not everybody tells everybody the same thing. So that's why the scores are different. And I've seen where scores were different by 100 points. So when you apply for a mortgage, they usually take the middle number or a tri-merge. They had their own formula when they deal with mortgages. Okay. Now, if you haven't seen your credit report, you need to pull it. Every 6 months in this atmosphere of data breaches, I say every 6 months, but at least every year, you need to pull your credit report. There is one location for a free government sanctioned credit report, and that is www.annualcreditreport.com. I'm reading off the slides, and I'm going to post this on YouTube. I'm breaking up. I'm sorry. Don't know why, but again, it's all going to be on YouTube, and I've even got my phone plugged in, so I don't know why I'm breaking up. So www.annualcreditreport.com is the government sanctioned website to get your free credit report. You don't get your score. You have to pay for your score. It used to be like $7 for one and maybe $15 for all three, something like that. So you get your report, one report every 12 months. So this is November. You can get the report for free, and you won't get it free again until November. So it's 12 months. It's not calendar year, it's 12 months that you get your free credit report. And that's the government sanctioned website to get it for free. Now they sell it on my FICO. They sell it over there, and it comes with a score. There's lots of advertising to get your credit report for free, and you've got to read the fine print. And most people don't read the fine print, and if you do read it, you might not understand it. Because everything that is free is not always free. It's usually free with strings. So be careful of those places that advertise free credit reports, because it may not be free. Annualcreditreport.com is the government sanctioned website for your free credit report. And you can go there, you get one report from each of the bureaus every 12 months. So you can stagger them. So you can go every 4 months and get like Equifax, then 4 months later get Experience, and 4 months later get TransUnion, and then by then it's time to get Equifax again. You can do it that way. You can stagger it. All right, so now let's talk about what goes into your credit report. This is how you raise your scores. 35% of your score, and this is on the slide, so you want to go to YouTube if you're not on Zoom right now. 35% of your score is your payment history. Translation, pay your bills on time. 35% of your credit score is paying your bills on time. And I know it's easier said than done. Let me define on-time payment. Posted on or before the due date, preferably posted before the due date. Posted on their side, not sent from your bank, received and posted to your account before the due date. That's 35% of your score. Times are tough. So let's say you can't pay everything on time. Pick one thing and pay it on time. Pick one thing and pay it on time. Pay it on time for at least 6 months in a row and keep paying it on time. That will start to raise your score. Then, using some of the information in some of the past videos I've done about ways to create cash, start paying a second bill on time. Still pay number one on time. Now you're adding a second one that you're paying on time. Now you got 2 on time. Then add a third one. Keep paying the first two on time, add a third one until eventually you're paying all of them on time. If you can't jump in and start paying all of them on time at one time, start one at a time, paying them on time. That's 35% of your credit score. People pay for credit repair, which is illegal under the federal law, but I talked about that at another time. People pay for credit repair without realizing what you have to do to maintain it. You can pay for credit repair all you want. Even if you found legitimate credit repair, if you don't maintain paying your bills on time, you threw your money away. 35% of your credit score is paying your bills on time. 30% of your credit score is lowering the balances on your credit cards. Get those balances down. %30 is getting the balances down on your credit cards. So let me explain. If your credit card has a limit of $6,000, you need to get that balance that you carry under $2,000. So if your limit is $6,000, you need, any balance you carry over needs to be $2,000 or less, 1/3. That's 30% of your credit score. Is any balance you carry over 1/3 or less of the available limit. So if you have a $6,000 limit and you're carrying $3,000, 50%, you're hurting your credit score. If you're carrying $5,000, now I hit my face. If you're carrying $5,000 or $59.99, you're hurting your credit score. You got to get that balance down to 1/3 or less, $2,000 or less. You got a $15,000 limit, you got to get it down under $5,000, 1/3 or less. That's 30% of your credit score. I'm pausing because I want that to sink in. 35% of your credit score is paying on time. 30% is getting the balance down on your credit card. That is 65% of your credit score. The other 35% is not important, and for the most part is out of your control. If you focus on this 65%, your credit score is going to go up. If you focus on this 65%, your credit score is going to go up. 15% is the length of your credit history. How long have your credit account been open? So I have a credit card that I opened in college. They say you can't take it with you. I'm putting it in my casket. I know I look like no, I don't, because I got a hair appointment tomorrow, y'all. So the gray is showing. Okay, so I don't look like I graduated last week, but yeah, that credit card is going in my casket because I've had on-time payment history, and it's got a zero balance, and every other year or so, thanks, Ann, every other year or so, I take it out, I go buy lunch for $10, and I come home and I pay the $10 right off just to keep the card active. Length of credit history. That card goes in my casket. That's 15% of your credit score. Don't worry about that. But where people hurt themselves with that, because they try to game the system and they try to bounce stuff around from 0% to 0% and balance transfer, you hurt yourself. You lower your score with that because you don't know the rules of the game. A, the balance transfer fees are really sky high now. And B, you're hurting yourself with the length of credit history, because you opening and closing these accounts, if you are even keeping up with them, and you're opening and closing these accounts and you're hurting yourself on the 15%. Mix of credit is 10%. That's like a mortgage, installment loan, a credit card, mix of credit. Don't worry about it. It's 10%. The 65% is what's hurting people. Inquiries, where you authorize somebody to check your credit, not the junk mail. Like I said, that 35% is not even factoring in unless you're playing that 0% game and opening a bunch of 0% credit cards. Focus on the 65% and get your credit scores up. All right, moving on. I beat that dead horse. Okay, the next slide just really summarizes what I just went over, so I'm not going to go there. This slide says focus on the 65%. 35% is on-time payments, and 30% is getting that balance down to 1/3 or less of the available credit limit. So let's talk about some credit repair resources. The Federal Trade Commission, thank you, Cynthia. The Federal Trade Commission has a booklet called Building a Better Credit Report. I didn't put this on the slide, I meant to. Okay, so you're gonna have to listen to me on this one. The Federal Trade Commission has a booklet called Building a Better Credit Report. It's on their website, which is on the slide, www.ftc.gov, but it's buried on the website. It's on my website, matthewsonmoney.com. Go to matthewsonmoney.com, go to resources and download it. It's a PDF, it's free, okay? It's a whole lot easier to find it on my website than to figure out what page it's on the Federal Trade Commission's website. So I save you a whole lot of time. Go to matthewsonmoney.com. I meant to put my website on here and I didn't. So I like the booklet. It includes sample dispute letters. I think the new one on their website took the dispute letters out. I have the one with the dispute letters. So I like that booklet. Thanks for sharing. Okay, thank you. So Building a Better Credit Report is on my website, matthewsonmoney.com, and it's also on the Federal Trade Commission, ftc.gov. You can get it from either one. Always pay your bills on time. 6 months of consistent on-time payment will help increase your scores. It's not going to jump. It's not going to jump in 6 months. I'm being real. Y'all be coming back beating me up. I pay my bills on time for 6 months. But it's not going to jump. It'll start to move slowly in the right direction. It took a while to get the scores to go down. It's going to take a while to get the scores to go up. Opt out of some of this junk mail. Opt out of these pre-approved credit card offers. There's a website, optoutprescreen.com. You can opt out and stop getting this tempting stuff that's coming in the mail. Do not get new credit until the old problem is fixed. One of the things that I work with with my clients is mindset. So in the intro, I talked about my signature money system. The M is for mindset. The M in money is for mindset. The mindset that got you into debt can't get you out of debt. So don't get new credit until the old problem is fixed. I've done 2 or 3 of these webinars trying to get folks to get their Christmas gifts early instead of having a whole lot of debt piled on in December. And then we got to do all this work in the first quarter of next year to get you out of debt, out of this extra debt that you piled onto the existing debt. I started in July 25th, I did Christmas in July to try to get folks to start buying their Christmas gifts in July. And I've been doing stuff ever since then to try to get folks to buy their Christmas presents early with cash to avoid piling on debt now, because 'tis the season now for debt. So don't get new credit until the old problem is fixed. So now let's talk about identity theft, because this is a really big issue. So if someone has used your credit, again, that booklet, Building a Better Credit Report, is good. Search for identity theft resources on the Federal Trade Commission's website. You want to consider contacting the Attorney General in your state. Go to your state website and look for the Attorney General. Reach out to the Attorney General. You want to report it. You want to report it to the police. The federal government has a website for identity theft. It's called identitytheft.gov. And then there's something called the Identity Theft Resource Center, idtheftcenter.org. Great websites. All of those resources are really good. On YouTube, I posted a Facebook Live I did back when the Equifax data breach happened, and that Facebook Live actually went viral. That Equifax data breach affected millions of people, and it's still affecting people. I encouraged everyone to put freezes on their credit reports. Everyone who was alive at that time and recently deceased, including newborns and recently deceased, because the Social Security numbers of children, including newborns, won't be checked until 20 years later. They graduate from college and go get an apartment, or they graduate from college and get one of those jobs that requires a background, I mean, not a background check, but a credit check, and find out that their identity has been stolen for 10 years. And they won't know it. So we have to protect our children. Let me keep moving because I have a slide on that. So let me wait till I get to that slide. Let me talk about credit score cautions. People with bad credit a lot of times operate on emotions, and that's a dangerous thing. I know you're upset about your credit, but don't operate on emotions. Slow down, do the research, take a deep breath, read the fine print. If somebody is pressuring you to sign something without reading it, don't sign it. Tell them you want your attorney to review it before you sign it. If they balk, walk away. Debt settlement and debt management plans might hurt your credit for at least 2 years, especially in the eyes of a mortgage lender. Be careful. I'm not saying don't do it. Go into it with your eyes open. Do not pay for credit repair unless you are fully committed to maintaining your 65%. If you don't know what I'm talking about with the 65%, rewind this video. Do not open new credit as a means of rebuilding your credit scores or to lower your ratios. Focus on better money management. Fix the problem. Don't add to the problem. Bankruptcy. Bankruptcy will hurt your credit for at least 7 years. You don't know what the future will hold. You may want to buy a car or a house before then. Yes, you can buy a car with bankruptcy, but at what interest rate? Something to think about. I've seen people file bankruptcy for as little as $5,000 or $10,000. You really need to talk to a few people before you file bankruptcy, especially on that little bit amount of money. Again, people are moving on emotions, and you really need to talk to somebody. A good bankruptcy lawyer should not let you file for $5,000 if that's all you have in debt. You need to talk to a few people. Okay, so now we got kids and credit. Due to the Equifax and other data breaches, consider placing freezes on all youth and minor credit reports. What do they need credit for? What does a kid need credit for? These kids are targets because thieves know that nobody's going to check their credit for at least 18 years or more. They can have their way for 18 years or more. And like I said, the kid then goes to get an apartment, a car, a job, and finds out that their identity was stolen, and it's too late. If you have kids in your life, like I said, yours, grandkids, extended family, church kids, youth group kids, I don't care whose kids, pull their credit report when they're 17, and I don't mean getting ready to turn 18. At least 6 months before their 18th birthday, pull their credit report. Once they turn 18, that debt is theirs because they're an adult. So don't wait until you're smack up against their 18th birthday, because if there's something on their credit report, you need time to file and prove that they're a minor and it happened while they were a minor. This is some serious stuff, particularly with the Equifax data breach and some of these other data breaches that impacted everybody. It is, I cannot emphasize it enough. And I know people personally who didn't do it, and now they're reaping the consequences. Equifax data breach was 2 years ago, and now these folks are struggling to get their identity back. And the thing about the Equifax data breach in particular, they're sitting on a couple million people's data. It doesn't mean they're going to use it right away. They got a lifetime to use it. They have a lifetime to use it. There is no reason for any child to have a credit. Teach children about money, savings, credit, and delayed gratification as children. We are a society so busy spoiling our children and giving them everything that they want. Hey, Beverly. Hey, Lisa. We've lost sight of a lot. So here on the slide, I have some resources to teach kids. Jumpstart.org, NEFE, NEFE, National Endowment for Financial Education, NEFE.org, and The Mint, THEMINT.org. 3 great resources for you to teach kids about money. After the holidays, only because I'm realistic and I know the closer we get to Christmas, the less folks are really going to be listening to me. I have some powerful info for setting up every child to be a millionaire. How is that for a teaser? Affordably set up every child to be a millionaire. Straight up, no chaser. And I'm going to give you a heads up on that one. Hey, Bev, I'm going to give you a heads up on that one. Not only do I want every parent on there, I want every parent with a special needs child on that webinar. That one I want to blow out the water, because those parents know their child's going to outlive them. And I want those parents on that night. So I'm gonna give you a heads up. That I'm waiting until after the new year, because see, now people are getting ready to be like shopping and stuff. So I'm holding that one. I'm holding that one. But we've got to teach our children so that they don't end up with the credit challenges, with the debt, with the stress that we have. Break the cycle. Let's break the cycle. That's why I'm here every Thursday night. Break the cycle. Break the cycle. Okay, so now you know, we talked about what a credit score is. It's a snapshot in time. I told you where to get your free credit report, annualcreditreport.com. I talked about what goes into your credit score. I talked about focusing on the 65%. I talked about the importance of kids and their credit. Every week I say it. Success does not come to you. You've got to go to it. It's not hard. It's not hard. I don't go over your head. I don't talk rocket science. It's not hard. It's work, but it's not hard. I mean, hey, we are building up to live the debt-free dream lifestyle. If it was easy, everybody would be chilling on the beach or fishing or playing golf or whatever it is that you want to do. Okay? Success doesn't come to you. You got to go to it. Remember, go to YouTube. Look up, go to YouTube, put in the search, Matthews on Money, all one word. I need you to subscribe. I have to get over 100 subscribers so that I can customize and name the channel. Because right now I'm over 50 subscribers. I'm almost there. Tell everybody, go to YouTube, type in Matthews on Money, click on any one of the videos and hit the subscribe button so that I get over 100 subscribers, and then I can change the name, and you could just tell people, hey, go to youtube.com/Matthews on Money and check out the videos. We're almost to that point. I need your help. I need your help. We're almost over 100 so that I can customize the name of the channel, and then all the videos will be so much easier to find. So with that, we'll be back next Thursday, November 21st. We will not be here Thanksgiving Day. I'm cooking the turkey. Have mercy, have mercy, have mercy. But we will be here next week on November 21st. I look forward to seeing you next week, as always. Follow me on Facebook at Matthews on Money. Tell your friends to be here. I'm here every week. You can subscribe to my newsletter on my website at matthewsonmoney.com. Remember to go there and get that FTC credit book, Building a Better Credit Report. Tell your friends, meet me here. Hey, check me out on LinkedIn. If you have a LinkedIn profile, linkedin.com/MatthewsOnMoney. Send me a connect on LinkedIn as well. I will see you guys next Thursday night. Thank you. Bye-bye.